What a day on Wall Street. We're calling this one the record-breaking grind, because that's exactly what it was. The market clawed its way to all-time highs, juggling some incredible earnings with some pretty serious global jitters. Let's get right into it.
So, check this out. The S&P 500 was up just 0.25%. I know, that doesn't sound like much, right? But don't let that tiny number fool you. It pushed the index to a brand new record close at 7,041. This wasn't some flashy, explosive rally. Nope. This was a slow, methodical, determined grind higher into totally uncharted territory.
And what's really fascinating is how we got to this new record. It was a classic wall of worry kind of day. On one side of the scale, you've got all this anxiety simmering in the Middle East, you've got oil prices creeping up, and a major shipping lane is still shut down. But on the other side, investors just shrugged. They completely looked past all of it and focused on one number: jobless claims dropping to just 207,000. That's a sign of an absolutely rock-solid labor market.
But as you know, the headline index, well, it never tells the whole story. It's just the tip of the iceberg. Because underneath that seemingly calm surface, individual stocks were making absolutely massive moves today. So let's dive into 3 stories that really paint the picture of what was going on.
First up, the semiconductor titan, Taiwan Semiconductor, or TSM. This company is a huge deal, a real bellwether for the entire tech industry. And its story today, it's a perfect lesson in how crazy market expectations have gotten. Just look at this. It's a perfect example of a total market disconnect. TSM comes out, reports a record-breaking blowout quarter, and absolutely crushes expectations. So what happens to the stock? It tanks, down over 3%. So what's the deal? Well, it is a textbook case of buy the rumor, sell the news. The stock had already been on this monster run, all fueled by AI hype. Perfection, and I mean perfection, was already priced in. So when the good news finally became official, traders just used it as an excuse to hit the sell button and lock in their profits.
And man, this really just hammers home the first big lesson of the day. In a market this hot, even incredible news isn't enough if everyone already sees it coming. The bar to actually impress Wall Street right now is just sky high.
Okay, so now let's move to our second story, which really builds on that same theme. We're going to look at the financial giant Charles Schwab, because they learned a really tough lesson today about this market's demand for nothing less than perfection. Schwab got absolutely hammered today. I mean, it took a nosedive, dropping almost 8%. But here's the wild part. They actually beat their earnings per share estimates. So, what was the problem? It was the top-line revenue. They missed by just a hair, coming in at $6.5 billion, when the street expected $6.6 billion. In a normal market, that might be okay. But in a market at all-time highs, that tiny miss was treated like a fatal flaw. The big institutional money just fled the stock, completely ignoring the earnings beat and punishing that revenue miss.
So the takeaway here is crystal clear. At these levels, there is zero room for error. A mixed report is a failing report. You have to have flawless execution. It's not a bonus, it's the absolute bare minimum requirement.
But you know what? It wasn't all doom and gloom. Our final case study, PepsiCo, gives us a fantastic example of what happens when a company gets its strategy exactly right, because it knows its customers inside and out.
Pepsi rallied over 2% today. Now, on the surface, it's because they beat on earnings and revenue. Pretty straightforward. But the real story, the detail that got Wall Street buzzing, was buried deep in the data. U.S. food volume, it actually rose for the first time in 2 years. And this was no accident. It came right after they strategically cut prices, proving that they found that perfect sweet spot to get people buying again. They gave up a little bit of margin for a huge, crucial win on sales volume.
And this is just such a powerful lesson on adapting to the economy we're in right now. Consumers are feeling the pinch from inflation. So finding the right price to win them back is everything. And PepsiCo just put on an absolute clinic on how to get it done. All right, so we've broken down the market's record-breaking day and the 3 big stories that were really driving the action. So now let's boil all this down into the exact takeaways you can use to sound like the smartest person in the room tomorrow morning. For TSM, here's what you say. Did you see TSM drop over 3% despite the massive earnings beat? It's a textbook sell the news reaction. These post-earnings pullbacks are exactly the opportunities we want to target. On Schwab, the point is this. Schwab dropping over 7% is a stark reminder of how unforgiving the market is right now. Companies have to absolutely nail their fundamental cash flows to sustain these premium valuations. And for Pepsi, the real insight is about the American consumer.
PepsiCo gaining over 2% is a critical data point for consumer staples. It shows the consumer is still buying, but they are aggressively demanding value.
So all of this leaves us with the big question of the day. The S&P 500 just closed at another all-time high, completely shaking off the geopolitical tensions in the Middle East. Do you think the market is getting too complacent about $100 oil, or are corporate earnings truly strong enough to carry us higher?
Comment below. Subscribe to Market Fluency for your daily edge.